Hey everyone, me Kevin here. Welcome back to another market closing live stream. They just said over here stocks are rallying into the close, and I haven't checked yet, so I'm excited to look. Let's see what they're saying here.
Groups that you mentioned right there probably just getting the help from being laggards and very under-owned right now. In fact, B of A had some work.
So this is interesting. So if the market, let's look at this, because the Nasdaq was down like 2% this morning. The Dow's the Dow is up now almost 1%. The S&P pretty much flat. This is interesting because bond yields are up. The market freaked out this morning when bond yields went up. So if overall the indices are rallying into the close, let's see what actually is rallying. Are we losing that connection between the bond yield again? This what happened last week on Friday too. Let's see what we got. So DocuSign still at lows of the day here at 209. But then again, they did start falling because of earnings. So that could be a potential reason. Same thing with ChargePoint. Peloton down 5.5%. Some part of me thinks that Peloton's going to continue to sell down until COVID's over and people are opened up again. And then people start realizing, wait a minute, Peloton's actually still selling bikes, which I believe will be the case. We've got Blink following ChargePoint down, Clever coming down a little bit. We've got Workhorse, Snowflake. What's Snowflake sitting at right now? Snowflake's at, that's Workhorse. Snowflake at 229. CRISPR Therapeutics down 3%. Zoom and Redfin down 3%. This is actually a recovery over here, I feel like. We weren't this low in the morning. This high in the morning at like Redfin, for example. Or were we? Yeah, no, we were a little lower. Okay. All right. So I don't know. I don't see like a big rally into the close like what they're talking about here on CNBC. It's certainly not as red for certain stocks as what we saw this morning. We've got the Matterport SPAC certainly off that spike, 1530 we had, spike down that we had. Let's see, GTech down a little bit, Salesforce, PayPal, all these guys down about 1 to 2%. NEO recovering, here we go. NEO's recovering, so where's NEO? NEO's at 45, 43, over 45 again. That's a big threshold number for me. Actually, a little bit, part of me doesn't, like I feel pretty well built out on NEO right now. I think I want to focus a little bit more. I really probably have to focus a little bit more outside the EV sector. I'm just so built up on the EV. But I'm so bullish on EV. Like I'm trying to do as much research as I can on therapeutics and genomics and gene editing. But I'll tell you, it is difficult. And to me, it feels a little bit like we're really reliant on the FDA and trials going well. And then you're going to end up having these stocks go 2 to 3x in a day. That seems to be what happens with these the pharmaceutical related stocks, which in some sense makes sense because there's a lot of risk in the pharmaceutical stocks that the product just sucks or doesn't work. And if it does prove to work, then the risk goes away. And you see these stocks move massively. So Tesla actually only down 1% right now. So a little bit, certainly I would say some growth going towards the close here, which is nice. NVIDIA back to almost 515 here. Incredible. Big, what do we got here? About a 5% swing on the day at Tesla, roughly. A little less, maybe 4% swing on the day at Tesla. NGA. Oh, NGA has been one that's, I think they're pretty much flat right now. Let's see, they just bounced past me here. Let's look at NGA. Northern Genesis at 1769. Heading back up to that 20 range. Let's see, CIIC. This was one that was pumping earlier. There we go. So still up about 10%. A little bit of a sell-off into the close on this one here. All right, let's take a look at the rest. Ideanomics, Pong, Snowflake, Rocket, Roblox. Okay, this is pretty stable here. Churchill Capital. Wow, Churchill Capital was at one point today down 2.5 to 3%. Then we're up like almost 4% at one point. Now we're flat. And I really think this was just a massive amount of buying volume that came in right here. Somebody executing some big old purchases. So not a surprise that we're seeing some of that deflation, not like inflation, just deflation, but the balloon deflating. Microvision holding strong. Express leading the charge here. With Microvision, GameStop up about 1%. Kind of sold off into the close here. We were up, especially while we were having that sort of tech disaster really early in the morning. And of course, GameStop going up, but also now kind of selling off into the close. Maybe people not wanting to hold GameStop over the weekend. This is something that, you can see big shifts once the weekend goes by. So you have to always ask yourself, do I want to hold something over and through the weekend? So, wow, EBIX at 33. That's incredible. Look at that one. I really think this thing's heading to 35 or above. Let me see here. EBIX. You know what? I'm up $2,000 on my $14,000 investment on this one. I think, I don't know. I think it might make sense to sell this one. I think I'm gonna close out EBIX right now. Just that way I don't have to hold it over the weekend. It could go up more. You know, EBIX was a swing for me, right? And we held this thing through the madness of this crash. So let me quickly make a note here. Okay. Good. So that'll bump the swing trade portfolio by another 2K, which is cool. I think and then we popped a couple other small ones. I think that's going to take my swing trade portfolio to like, I don't know, up 22K or something like that. And we've really only been playing with like 15 to 30K at a time. So yeah, no, it's been fun. And that's yeah, we'll do more of that too. I want to do a lot more, especially on these videos here, the market open and the market closes. We'll do a whole lot more trading once we get to a little bit more of a stable market. Lately it's just been by the dip, but that'll change. Okay, let's listen in over here to what CNBC is saying.
To move into streaming, Netflix has the power and heft to now sell its content to the traditional media giants as well. So certainly a blurring there, Morgan, but also it really shows the scale they have in terms of production and also the potential for them to monetize their content in different ways.
But presumably, Julia, they'd only ever want to sell it to a traditional cable or normal.
That's a good line, Jacob. Long hold equals swing trade that went wrong. I don't do that. Like, I don't mind if there's something that swing trade that goes wrong, I'll sell it. Like, for example, I lost $1,000 on Dropbox because that was a swing trade. And I'm like, I'm not holding this.
Internationally. So it would be off track for them to be really trying to do this as an ulterior plan. But I think that the question is whether they can generate revenue that way without it distracting from their
Netflix.
primary.
Okay. We'll come right back to them. We've got another 90 seconds here into the close. Let's look at the sticks. And then what do we got? Does anybody, if anybody has earnings, let me know. Just type earnings and the ticker symbol, and I can pull up Bloomberg and the Bloomberg terminal after the bell. Let's see, Rocket. Remember, I don't like buying Rocket really over 23. I'm not adding it all to them. United Wholesale. This was one I've been warning about. Like, just stay away from these mortgage ones. And honestly, one of the things that I stay away from too is, like, it's one of the reasons I've had so many issues getting into like Affirm or SoFi is because just the lending industry sucks. It sucks so much. Yeah, I mean, for just whatever number I throw out, just divide it by like 20 mil. And that'll give you a percentage there, agent. So, like, for example, if I'm swing trading 30, 1, 2, 3, that's somewhere around, 0.15%. Okay, what else? Snowflake. Okay, we got 30 seconds to the close here. No real big changes going into the close here. AMC is moving nicely. And EBIX is holding up. I mean, EBIX could run, don't get me wrong, but I made my money on it. I'm good.
Unsurprisingly, perhaps given that inverse correlation between tech and growth, and then, of course, rates, the best performing sectors, industrials, also utilities, real estate, which tend to be more rate sensitive still for the week. Strong gains for the Dow, the S&P, and the NASDAQ, the largest in 5 weeks. And the Dow looks like it is getting ready to close at a record high.
Indeed, it has up 0.9%, just off the high of the session. We were briefly up over 300, closing at 293 for the Dow. Welcome to the Closing Bell, everyone. I'm Wilfred Frost, along with Morgan Brennan, who's in for Sarah Eisen, and Mike Santoli, CNBC senior markets commentator. As we just said, a record high once again for the Dow and S&P. The Dow up markedly today, 0.9%, 291 points, just 10 or 20 points or so off a session high moments ago. S&P fractionally higher, 0.1%. The NASDAQ, though, down 0.6%. As we were discussing, some of the big cap tech stocks lower today. Only two sectors lower on the S&P, tech and communication services. Utilities, industrials and financials led the charge higher, and real estate as well. In fact, real estate, the best performing sector right into the close. Airline stocks taking off today and have been significantly outperforming the broader market during the course of the year. Coming up, JP Morgan senior airline analyst Jamie Baker will join us and discuss which carriers are best positioned to cash in on increasing travel demand. Charlie Bobrinskoy from Arian Investments still with us, and Ali McCartney.
We'll circle on back to these guys in a second. All right, let's see how the market closed. We'll also, oh yeah, there's no Sarah today. I see somebody saying that we want Sarah. We got days off too. But anyway, let's see how things close today. It looks like Microvision was really the runner here. BlackBerry came out of nowhere. Yup, BlackBerry just all of a sudden ran after our market opened live, kept running throughout the day, closed with massive volume into the close at BlackBerry. Express shot up at the beginning, sold off midday, came back up at the end. Crazy. No consistency in the patterns here. I will tell you something that has been consistently strong, though, over really the last couple, actually, I should just say today, mostly today, has been the recovery stocks. These recovery stocks sold off as soon as people started coming back to tech, and now they're back. Nordstrom, Macy's, GoPro, AMC up 8 to 10% here. EBIX closing up $7%. I'm sorry, 7% up on EBIX. I have sold. Took $2,000 of profit on 14K swing trade. We did have to ride the madness, but that's okay. We diamond handed it through the madness. Do not sell into weakness. Remember, paper handing is when you sell into the weakness because prices are falling and you can't handle the pain. GM up. Wow, GM gets a 5% push today, almost back to $60 a share. Why? And Ford up as well. I think as recovery plays, honestly. That's interesting. Shift closes up over $10, also rallies into the close. Of course, now gets a massive red candlestick here in the after hours. Not sure what's going on there. Looks like some sell order just went through into the after hours there. EXPI up 52.46, up about 4%. Airlines up. Recovery restaurants up. We've got API heading back to that 72 figure. A nice rally into the close. We actually did have a good rally into the close here. Quite a few stocks. This is a strong close. Have I seen the all-new electric Audi? No, I haven't. We'll take a peek at that in a second. Here, I'll put you up here. So that'll be my reminder. So GameStop up 1.7%, Home Depot up, Walmart up, Planet 13. So some cannabis here moving up a little bit. Oh, Canoe actually must have sold off here a bit intraday. What happened to Canoe? Yeah, look at this. Canoe was flying high over 15. Massive sell order must have come in over here. I don't know that we had negative news here, but definitely a big sell order coming in over here. Tried to recover into the close, trying to recover in the after hours, going up another 0.5% here in the after hours. Let's see if anything is making a big move in the after hours here. Let's pull over our after hours chart. Which remember, if you like this platform, go to metkevin.com/Weeble, deposit $100, and they'll give you 2 totally free stocks worth anywhere between, I don't know how low, and up to $1,850. Yeah. This is the Weeble trading platform. Okay, so in the after hours, we got Enphase. Okay, Shift has not, that big red candlestick has disappeared. Could have been a sell order. Shift down about 0.7%. Express giving up a little bit again here. NGA down again. Airbnb, Spirit, Enphase. I mean, this is pretty immature right now. These guys just around 0.5%. Could just be fluctuations here. Tuscan Holdings, 1.8% up. CLII trying to push up at 1468 here. Fisker trying to move up after, pretty sure, did Fisker go red today? Yeah, Fisker went red with a 5.7 down. And Churchill actually closed red at down 0.19%, but up 0.5% in the after hours. So we're covering that. Lemonade over 100. Very nice. Okay, let's listen in over here for a second. I'm gonna get also the Bloomberg terminal up, and then we'll look at that Audi.
On a day with bond yields near 13-month highs, that's a significant achievement for the market here. Sector movers for the week, well, the reflation trade is still on, and tech is weaker, but not as weak as it was before. So there's your reflation trade. There's your retail stocks doing great. There's your bank stocks doing great. There's your industrial stocks doing great. The NASDAQ 100, big tech sector, down 1%, but that's much better than it was earlier in the week. That is a pretty impressive close given all the concerns about higher rates and the impact on technology stocks. As for mega cap stocks, mega cap tech stocks this week, yes, the semiconductors got hit. So we saw, Xilinx was hit earlier in the week, but look at these moves towards the end of the week, moving up 5%. The AMD up 3%, Amazon, Apple was flat. It was 116 on Monday, 120 today. That again, quite an achievement for the overall mega cap sector. Now, one thing that's starting to show up is the reflation trade is starting to look a little tired in the energy group. Oil's having a lot of trouble at $65, just going any higher. So this week, after huge run-ups in the last few months, most of these are called high beta energy stocks. They move a lot on a daily basis. Marathon, Devon, Hess, and Occidental all down a little bit. But overall...
All right, let's go ahead and take a look at that new Audi here that was mentioned. So I believe it's this one. Audi's all-electric Q4 e-tron crossover will have a dynamic AR windshield display. This is actually like old. Like this has existed for a while. Back in 2014, when I was in Germany on the Autobahn, you have a lot of German cars on the Autobahn using this because the Autobahn's so fast that sometimes you don't even want to take your eyes off the road to look down to see how fast you're going because you're going so freaking fast. The fastest I've ever gone on the Autobahn was like 134 miles. And that's a lot. Like I did not want to look down. Like I remember telling Lord, I go, Lord, how fast are we going? Because that particular car did not have one of these hollows here. So maybe a new Audi Q4 e-tron, what we know so far. Yeah, I mean, there are going to be a lot of these new electric vehicles to come in. I really believe a lot of this comes down to the autonomy, and this is why I'm so anxious to see what Lucid is going to announce with autonomy. That's going to be such a big play. We know they are focused on the autonomy. You should try to drag race with the Prius. Yeah. Oh, Lester says that's slow. It was fast for me. A ton of Audi e-tron in Europe, already seen quite a few in the Netherlands. Nice. Yeah. Honda has that. E-tron's old, been there for a long time. Oh, okay. So, yeah. I don't know. Yeah, the big thing for me is it's got to be autonomous. The autonomous technology in the EV space, that's what makes you the money. That's what prints you the tendies. And that's one of the reasons I'm so freaking heavy on Tesla. Look, I like that NIO's got the autonomy. They've got a lot of these similar functionalities that Tesla has. But in terms of that getting from where NIO is now to the full self-driving bridge, I don't know. You got to hand it to Tesla. They certainly feel like they're far ahead right now. Or maybe that's what we think based on Elon's tweets. Yeah, did I see the CU driving the Lucid? Yeah. I think I might do a standalone reaction video to that and sort of add my commentary there. Yeah, why did Shift go up today? I don't know. Why Shift not $20? Yeah, I don't know. All right, let's go ahead and pull up the Bloomberg. Let's see what's going on here. Let's go ahead and start with the 10-year, and then we'll jump into top news here. So let's get rid of this here. Let's start with the 10-year. Yeah, it's actually surprising. See, remember this cycle we've been through. A lot of this crisis was caused by the 10-year bond going up and the 5-year bonds going up quickly. Then this morning, we had the 10-year spike. So the 10-year spikes, we get a big sell-off in tech. And then what happens during the rest of the day? Tech recovers and goes up as bond yields also kind of slowly stay stable and tick up. That relationship is not as clear as people will make you believe it on YouTube. Like I hear people in either the comments, and rarely I listen to little snippets of other videos, and I feel like it's overly simplified to say, oh, bond yields go up, people are going to go, well, may as well not invest in stocks, you can go buy some bonds. It's overly simplified. That is a nice theory to trade off of, but it is not always consistent. That it broke apart today. It was true this morning, broke apart throughout the day. Last Friday, the same freaking thing happened. It's bizarre. Hopefully, since we're kind of following the Friday pattern where we had a dump at the open and then a stabilization upwards towards the end of the day, hopefully that means we're going into a similar pattern that we saw this week, which is, sure, we had a bloody Monday this week, but Tuesday, Wednesday, Thursday were absolutely incredible. Yeah, CNBC does push that narrative. I mean, this morning, I don't know who it was, but one of the anchors was up like, yeah, and we all know more inflation is coming. I mean, we just printed another, $1.9 trillion. Yeah, I definitely think that narrative it continues to push this fear over inflation. But, aside from energy prices and certain logistical issues causing food prices to go up, we're not really seeing consumer prices go up in other areas. And this is tough. And that's the tough thing about inflation, because we have to separate so much crap. I mean, think about it. We think of inflation as one thing, but no, it's not one thing. There's asset price inflation, stocks and real estate, induced by lower rates and money printing, sure. But that's not consumer price inflation. That didn't make my phone more expensive. There's a chip shortage. Maybe that's going to make my phone more expensive. But is that permanent? Is the food shortage permanent? Is the energy issue permanent? So that's what inflation is one of the most complicated things to really understand. And it's one of the reasons I hang my hat on. I don't think, I'm 70, 80% in the direction of, I don't think we're going to see this long run high inflation, even with all this crazy money printing, is because we, as a maturing democracy, and this is really maybe the political science part of Kevin, believes that maturing democracies suffer from deflation more than they suffer from inflation. It's unstable or instable, not stable government that can lead to hyperinflation. That's what you really got to be concerned about. All right. Somebody says their mental issues are permanent. I'm right there with you. I feel broken too. So I think you're joking, but I don't know. Is it unstable? Thank you. Because you think of political instability, right? It's like grammar. Oh yeah, who's got earnings today? I didn't see any tickers come up for earnings today. So let me look at the earnings capabilities. Not stable. That's right. No earnings today. How boring. Look at this. The calendar. Let me see if I click show more. Oh wait, no. If I click show more, some things come up. That's weird. Okay. So Kirkland. I mean, I think they usually just show the popular ones, and I actually don't recognize any of these. And so that's probably, show only confirmed. Oh, just these guys. All right. Okay. All right. I mean, look, I'll take a boring day over a margin call any day. All right. Come on. Let's be real here. Okay. This here says, Paper Hand and Osborne said to plan $1 billion UK climate IPO. Not a surprise. They make bank off those IPOs. Biden celebrates stimulus with Democrat-only Rose Garden event. Well, we saw that. We streamed that live. Italy heads back to lockdown as Draghi vows faster vaccines. That's where we got married. Biden team vows fast response on SolarWinds. U.S. passes 100 million doses. Credit Suisse for weeks. Greensill says he warned Credit Suisse for weeks before collapse. Yeah, so what happened here? This is something I keep hearing, and we're all left. Well, you look at numbers all day long. So what do we got over here? All right. So what is this? Lex Greensill said he told top Credit Suisse group officials of his difficulty securing fresh insurance to cover corporate loans underpinning his business for weeks before a supply chain finance empire's abrupt collapse. The ex-billionaire regularly updated executives, including Chief Risk Officer Lara Warner, of his problems in finding new cover after the Australian insurer Bond and Credit Company decided against renewing policies on $4.6 billion of corporate loans. Swiss Bank was aware of the difficulties. Okay, so someone collapsed here. Documents added a new twist to the saga. Valuation uncertainties, $10 billion frozen in funds. This is why you always pull cash out when you start having problems. Credit Suisse decline. The scandal continues. Yeah, this is probably beyond the scope of this live stream here. This bank scandal. Wheaton. I thought that said Wharton. Wheaton CEO sticks to gold and silver, even in battery/metal boom. Okay. COVID related. All right. AstraZeneca gets WHO backing. Okay. Denver gets snow. Bitcoin could spice up the. Okay, let's look at this. The 60-40 recipe here. 60-40 recipe is like 60% bonds, 40%, 60% stocks, 40% bonds. Some people do it age-based, your allocation. This is something that Kathy has talked about, Kathy Wood. Vanguard, BlackRock. That would be interesting because so far I feel like Bitcoin has honestly been trading with the stock market. Not as sort of a balance to the stock market. I mean, when tech sold off like 30%, Bitcoin was down like 20%, remember? So keep that in mind. Bitcoin, I don't use Bitcoin as a hedge to tech. Let's put it that way. All right, let's go back to Webull here. See what's happening in the after hours. So Clever's coming back. GameStop trying to push again at 266 right now. API pushing in the after hours. We have Fubo TV and Ebix down. Oh, come on. Don't tell me I did not cause this. But we did close. We did sell before. Look, it actually rallied into the close. So I could have probably, if I just sold right here instead of like right here, I could have probably gotten a little bit more. Oh, well, doesn't matter. Okay, so what else? Yeah, let's listen in over here, and I'm going to pull up Bloomberg as well, see what they got to talk about.
Look at why there could be a major rebalancing away from stocks to bonds on the horizon and how it could hit the market. Plus, is nearly 200.
Okay, yeah, I'll be going to bonds real soon. That 1.6% looks real juicy.
Now worth $20 million, not Mike Santoli's, alas, for Mike. Coming up, we will ask a prominent NFT investor why he's so bullish on this market.
I'd like to hear that. That is one thing I'll say. The NFTs, it makes me, I don't know. I don't know. I'm trying to love it. Let's put it that way. I am trying to love it. I'm having trouble. Green still looks like the I told you so guy. Oh no. Square is legendary. Why? What's Square doing? I think Square is going to be a killer in this NFT space. Like that's where the money is. Because think about it. So in case you're confused by the NFTs, like this is my synthesis here of all the madness. So you can have digital art. I made a video on this. Banksy burned a real painting he made called Moron in 2006. And on the painting, it says, "I can't believe you morons buy this, SH." So he burned it and then basically sold the digital rights to that painting to somebody else. So now the blockchain or blockchain technology, however you want to say it, always has a permanent record of who's now the owner of this that sold for a ton of money. I don't remember exactly what it sold for, but it sold for a lot. But what's more interesting to me is actually potentially the digital rights to songs. Because if you can sell the digital rights to songs, you could get recurring revenue, like potentially dividends from owning a share of a song, especially if the song becomes more popular. Because there is such a digital rights, like there's so many people involved in the digital rights and licensing and of licensing music, I feel like there's a real potential there to make money. And Square is the only company right now that I visibly see. That doesn't mean there aren't others. I'm sure there are others. But that we visibly see that it seems like it's got the pieces of the puzzle together. They own a music streaming service. They got Cash App. The CEO just sold a tweet via, as an NFT, his first tweet ever. The puzzle pieces are there. Puzzle pieces are there. Okay, NFTs are amazing, but not for buying 3D renderings of a fake room or some dumb tweet. I kind of agree with that. Like, I think the music thing has potential. So, yeah. But in terms of digital art, I'm still a little, I could digitalize those broken headphones. Yeah. I did round up my donation. I think after fees, I think we raised like $14,000 for charity. I rounded that up. So I covered the fees and rounded it up to 15,000 for those. And so the Children's Heart Foundation has that now. I wired money over to them so that they didn't have to pay the credit card fees again. Because they're like, oh, you can pay with credit card. I'm like, I don't want you guys to pay another 5%. And they're like, well, you could wire. Go, sure, let's do that. All right, let's see here. Looks like Larry is doing politics again.
EPA administrator, my great friend Andrew Wheeler. Andrew, I'm going to get your take on this whole climate infrastructure, but just tell me a little bit about this $2 billion fund. Is that unusual? Does that?
Dave D, I think you are correct. I heard Chamath's paper hand space play was due to margin issues he's had. So before this crash, he actually, just fun fact, before this crash, and I don't know where the interview is, but I remember very clearly in an interview, it might have been one of his podcasts, he says, yeah, I mean, sometimes the banks call me up and they're like, hey, man, we're getting a little tight here. You need to free up some liquidity. That was before the crash. So if he was tight before the crash, bro, it's your fault, man. You played margin too tight. That's your problem. I don't feel bad for that.
States, particularly out west.
Yep. And we've seen signs of that. You know, they took out the Keystone pipeline, which cost jobs, the Dakota Access line that cost jobs. So there's
I don't know that we care so much about the politics. So I'm gonna back up there. I thought maybe they talk about infrastructure like EVs or something, but they're gonna go down the political direction here. So if you understand music NFTs, translate that into comedians releasing jokes, esport players releasing anything. So I have issue with that, and maybe add clarity to this, but. Like, I get the music thing because there is already a licensing system. People are paying for songs. People are paying to stream music. The money is already there. The profitability is already there. There is no profitability in saying somebody else can own my joke. At least that system doesn't exist yet. Maybe it will. But like, why would somebody want to buy somebody else's joke? Like, I know they're all off scripts, right? Like the comedians, but it's like, I mean, maybe the original, because some of the comedians have script writers, right? So maybe, maybe the script writers will license this to the comedians, but only one comedian would buy it and use it. And then once the joke is used, I mean, like Dane Cook can only talk about the shaggy dogs so many times. You know what I mean? But some of the songs are timeless. And then esports, I don't know. I'm skeptical. Yes. Regarding fundamental analysis, that's actually my favorite part of the course is when I release fundamental analysis videos. And you don't actually have to agree with all my fundamental analysis, but at least it gives you some thoughts into how I think. So, okay, let's see here. All right, let's see what the sticks are doing right now, and then maybe we'll get back to top news here. So let's do a quick stick update here while Larry is talking about Democrats pushing for green socialism. Okay, so, here I am. All right, so we got Fubu Express, EBIC Shift, these guys down 1% to 2%, Sundial down a little bit again. Let's scroll to the bottom here. What do we got? Going up. Oh, look at the recovery stocks continuing here. Fisker coming back up. Palantir and Redfin trying to come up a little bit, but look at this. Clever, and where'd Darden go? Darden was literally just here. Okay, maybe not. Never mind. I was going to say recovery stocks because Darden was there, but it disappeared on me. Churchill still struggling to hold on to that 0.5%. DoorDash moving up a tiny little bit. Tesla green in the after hours, but did end up red for the day, down about 0.8%, regaining less than a quarter right now, or approximately a quarter right now. Let's go to the news. Crypto giant Binance weighs registering with CFTC. Yeah, after they just got spanked this morning. All right, this is nothing new. This is all the same. Okay, wait. Peloton basks in celebrity love while at bottom of NASDAQ 100. Okay. The 10-year. 10 years at 1.6247. A little bit off of its highs, but these are highs. I mean, if we zoom out a little bit, do I like fish sticks? Who doesn't like fish sticks? Like you could fry anything and like it. I offer my student loan debt as an NFT. Anybody want it? Top Shot has a good format. Top Shot is like a specific like you're buying like specific like reels, right? Or clips rather. Let's see. 3D houses. I need to publish a few videos on 3D houses. I have some opinions on it. So right now, I think it's still a little too expensive. We'll see how that process develops. But yeah, anyway, if we look at 6 months of the 10-year, we're definitely way up, right? Let's go back a year. We're still up, okay? As of a year. Kind of makes sense because of COVID coming. So if we get out to look at bond yields when they crashed, bond yields started crashing. Oh my gosh, it's almost like the bond yield predicted. That's so weird. So see, this is where the relationship is so weird. What? Bond yields crashed here, which means people were buying bonds like crazy. It could have been a flight to safety. Because as that yield came down, you would think that the stock, see, if you listen to all of the mainstream talk right now about how, oh, bond yields go up, stocks go down. Well, what happened here? Bond yields plummeted and stocks plummeted, right? Because of obviously the crisis. So you got to be really careful with that link. The link is not as the link is so temperamental. You can't count on it. But this makes sense. People fleeing to safety, plummeting the yields. And really, this is all COVID right here, this hole. I mean, look at this big hole behind my head here. This is all a giant hole of bond yields caused by COVID right here. It's like the bond market got COVID, got sick, and it's been out for a couple weeks relative to the lifespan of these bonds, some of them. But anyway, before, in 2019, we were pretty low over here for a period of time. We were sitting around 1.7 to maybe just below 2. But really, if we go back, Max is probably going to be a mess. If we go back and just look at this last 10-year period here, we're really declining, right? We've got this consistent decline since the Great Recession. Sure, we get these ups and downs, 2008, 2012, 2016. Sure, we get these ups and downs, but the trend line here is very, very consistent. Consistently down. And this hole over here for COVID, who cares? Like, seriously, let it go back up to 3%. I still think, like there's no way over this next decade, even if the 10-year goes to 3%, I feel like we could sustain massive sell-offs. But who knows? Who knows? I mean, nobody technically knows. Oh, wow. This is interesting. So who remembers the Toronto's lady, Elizabeth Holmes? They compared her to like Nicola. Anyway, apparently it says here, Elizabeth Holmes' pregnancy likely to delay trial by 6 weeks. That's an interesting way to delay a trial. Oh gosh. All right, let's see what's going on over here. Let's talk about market share with these cars.
The environment, definitely the Biden administration has opened the door very clearly to the battery electric vehicle industry. And we've been in recent discussions within the industry about what are the consequences, how we should change our supply chain to support this demand. And I think a lot of good things are going to happen. Namely, in our case, for Hyundai, we just launched.
Good point, Terry. I pinned that comment up here.
Battery electric vehicles, which is called Ioniq. And we took advantage to launch our first car within the brand so-called Ioniq 5, which is going to be launched in the States this fall. So a lot of new technologies, chips, semiconductors, battery, so supply, production, a lot of these things are happening as we speak. And I think we are really ready, the best probably OEM within the industry to respond to this demand.
Which of course raises the question, if you make it, will they come? Especially when you think about all the infrastructure that needs to be built out to be able to charge all those EVs and make sure that people can do things like long distance road trips and not have it be double the time of a combustible engine powered car.
You are right. I mean, this is probably the biggest challenge for this market to develop. is the infrastructure. But again, the U.S. government is very committed to support and develop the infrastructure. And also the OEMs, we are working on that. And then the way we're working is by increasing the range. So again, our Ionic platform is going to be able to provide more than 300 miles EPA, which removes a lot of the anxiety. And probably in the future with fuel cell vehicles, we're going to be able to make it to around 500. So together with the government, the infrastructure development, and the greater technology, I think we're going to help this industry to really boom.
Jose, did Hyundai need partnership with someone like Apple? Are you seeking any other partners
This is important
in this space, or happy to plow on regardless now that the conversations with Apple have ceased?
Well, I think Hyundai is large enough to be able to develop the business without the need of any particular partner. In the environment that we live in the ecosystem of developing a lot of technologies in many areas, partnership is one of the best ways to go. But needing anyone in particular, I don't think so.
Jose, finally, as we do see vaccines roll out in a much more meaningful way right now, I wonder how you're thinking about that dynamic within your own workforce on factory floors, for example. Is vaccination something that you may require in the future or even just incentivize for your workers?
Definitely. So in fact, in our plant in Alabama, we have already worked with the local government and with the local institutions to try to offer vaccinations to our employees. And actually, most of them volunteer. So we're very happy about that. It's not a requirement, but it's recommended. And we're happy to see the evolution. So definitely a good thing.
Jose, thanks so much for joining us. Good to see you.
Thank you for having me. Take care.
Beeple is the hottest artist.
All right. So this is actually interesting. So one of the things he talks about is how infrastructure is really what's holding back the EV market. And that's a very interesting catalyst, because think about it. If you had a ton more infrastructure, then maybe what you actually accomplish is the eliminating of the range anxiety, charger compatibility anxiety. I mean, there are plenty of complaints online about chargers and charging stations sucking, charging errors. I mean, when I first got my Tesla, the chargers were full of errors. I would plug the thing in, it wouldn't work. My car wouldn't take the charge. The thing just said charging error. I had to get towed once because the stupid thing just wouldn't charge. Like, there's still so many issues. Now, Tesla has solved a lot of those, and I've been very grateful for that. But this Hyundai exec's not wrong. You know, it might take another 5 years for people to really go, okay, yeah, I trust electric, you know, and then probably another 10 years thereafter for people to actually transition out of ICE. To me, that creates some absolutely massive and incredible opportunities for the electric vehicle market. It's not so much the constraint of the companies or demand. The demand is there. The companies are there or developing now. It's really the constraints of, where are all the chargers? Where am I going to plug all this? Most homes don't have electric chargers. Well, what happens when they do? You know, interesting. Like, all new homes in California have to get built. They have to get built. I think it was as of like 2018. They have to get built with a 220 volt electric vehicle charger capable plug in the garage, which is like a $12 freaking plug, but you got to run the circuit and all that. Kevin, I learned something. Oh, thank you, Dankeschön. How can a regular person make an NFT? Yeah, there are like a ton of websites for making your own NFT. Like, you can sell your own tweets and stuff like that. Okay, let's see here. EV chargers use primarily natural gas. Yeah. I mean, I think there's more to the EVs than just sustainability. Obviously, sustainability is great, but I think there's more to it. I think people like the idea of having a full charge at home every night. People like the power and responsiveness of EV. People like the feeling of, oh, well, I'm not emitting, even though technically you're using fossil fuels to charge your car, right? So I think there's there are a lot of reasons to like electric. Of course, there's some downsides as well. I think if you get it to a 500-mile range option, it opens up. That's probably true too. And they need to get this like the Lucid. Imagine if the Lucid Air did a 500-mile range battery, but then got the cost of that car to $50K. Oh, dude, it'd be a game changer. Let's look at the Lucid really quick because I think their $69,000 version is lower. It's like a 300 or 250 mile range or whatever. Starting from 69K. Yeah, but that's the expensive one. So what is this? That's not bad. Look at this, folks. If the Lucid can actually deliver on a $69,000 car with 3 years of free charging from Electrify America and 400-mile range, that is not bad. That's not a bad deal. Now, we'll see, by the time they ever get around to deliver this, Tesla will probably do that as well. Because what does the Model 3 do right now? Let's look at that. Obviously, Tesla's my number one. But just to compare here, I mean, look at that, 353 already, though, right? And it exists. And it's cheaper than 69K. And then I think we got the long range here, too, right? But the long range might be the one they advertise there. Yeah. The long range, I mean, 38K for long range. Oh, my gosh. Look at this. Jeez, when did this happen? The standard range is now showing up at 29K. Oh, because they have the potential savings in here. Oh, I hate it when they do that. Okay. So let's get rid of the potential savings. All right, so there we go. Long range, 46K. That's still a lot cheaper. I mean, that's $23,000 cheaper than the Lucid at 50 miles more on spec there. Yeah, standard range, 37. And Tesla's got the price. They got the price competitiveness. So, all right. Taking a look at the sticks again, 2.8% down on Fubo TV, BlackBerry up, Clever up. These guys up just about 1% here, a little over 1%. EXPI a little below 1%, up to almost $53 now. Market just feels like it's overall trying to just really inch up here. Slowly go back up, slowly recover from the madness we had. Tesla pretty much flat here in the after hours. I don't know about that. Tesla won't have the quality issues. I don't know. Manufacturing sucks. Look, I know there are a lot of people who aren't enthusiastic about Lucid. I get it. And you're right to be skeptical. Am I getting the Cybertruck? Totally. Let's see. Oh, nice on the Lucid. Yeah, I don't think Lucid is going to partner with Microvision because Microvision doesn't have anything. Look, don't get me wrong. I think there's a fun momentum trade in Microvision, but they don't have anything. They're trying to find a manufacturing partner. That's it. All right, what else we got? CCIV chart today is whack. Yeah, a lot of buying and selling today, I feel like. Gas engines are significantly less efficient than a power plant just because of scale. Good point. That's not a bad point. And I don't know how much loss there is from grid to car. Probably 10%. Battery swap is inefficient. Yeah, a lot of people hate on the battery swap out here in America, which is one of the reasons Elon killed it out here. I have a tweet liked by Gary V and one quote tweeted by Tim Dillon. Who want to buy? That's interesting. The value of your NFT goes up or down maybe based on who's buying it. Desktop metals. Yeah, I'd have to look. I don't know much about desktop metals. Have to look into that. Where are you going to put the Cybertruck, Kevin? Yeah, tell me about it. Lucid should team up with Apple. Yeah, I mean, I hope a lot of that isn't built into the price because I don't know if that's going to end up happening. What's up, computer customs and fix? Shift just ran a TV commercial while I was talking here. I should have put it up on screen. Okay, so let's go to the top news here. All right. Okay, what do we got here? Oh, somebody is CCIV a buy under 30. I like Lucid under 30. All right, let's go to top news here. Top news and they're talking NFTs here. Oh, this is what we were waiting for.
Digital trading cards, and Mike Winkleman, aka Beatball, just sold a piece of digital art for a record-breaking $69 million. All three talked about what this new world of digital collectibles will look like.
A trading card you have in hand, but it's a digital trading card. So it's a new era. And it's just great to be that guy to kick it off, to start this new boom that's going to happen and be that first athlete to get on it.
I think the Chiefs Kingdom and the fan base that we have, they're so supportive of me. And so we just want to do whatever we can to find another asset for them to venture off and find a way to connect to me and for me to connect to them.
It's such a blank slate. And with restrictions, with COVID, we're honestly not even able to see a lot of the use cases. So I really feel like we're just at the beginning of sort of scratching the surface of what this could be used for.
So joining us now is NFT investor Michael Levy. Michael owns one of the most valuable collections in NBA Top Shot, which is a blockchain-based platform to buy and sell digital basketball trading cards. Michael, thanks for being with us today.
Morgan, thank you for having me on.
Are we still in early innings? How do you see it?
So I do think so. I mean, I think in the NFT world and in Top Shot in particular, we're very, very early innings. I think a huge majority of people hadn't heard of NFTs at all, let alone Top Shot, until the last few weeks. I think in Top Shot's case in particular, there is a long, long way to go. Some of the reasons I remain bullish, I know you guys mentioned that I don't plan on selling, and I will verify that. I'll be holding on to my collection for a long time. We're aligned with the NBA. We have an enormous addressable market here. You really just need internet access in order to play Top Shot. We haven't yet entered China as a market, which is an enormous NBA market. And so I think in Top Shot's case, we may still be in the dugout here, maybe the top of the first inning, but we have a long way to go.
Yeah, I would imagine that you're still probably having to explain what NFTs are to a lot of people right now, too, just given how quickly this has sort of exploded onto the scene. So how do you think about it? I mean, basically, it's almost like we're buying a piece of code here, right, that no one else has. Do you see it as a digital trading card? Do you see it as something else? What are the use cases? Where are the ultimate opportunities to extract value here?
So it's a great question. I think the easiest way to put it is exactly what you said. It is a digital trading card. Some people ask the question whether or not it comes with copyrights or any royalties associated with usage of your highlight. And the answer is no. It's purely a collectible at this point. And so the way I view it as valuable is the same way anyone might view a sports card as valuable. And an analogy I like to point to is the Mickey Mantle card that recently sold for a little over $5 million. Now, I can replicate that card in my basement with a high quality printer with the right technology. I can make an almost exact replica of that card.
But you never got the original?
But it's worthless. And the reason it's worthless is because it lacks the things that give that Mickey Mantle card the value, which are authenticity, scarcity, and MLB license, the story around the card, and that there's a market that will pay significant dollars for that card.
I don't know, folks. I just don't know. I think this market evaporates in a crash. It makes me so nervous.
Apply to a Top Shot moment. So they are digital cards, but from my standpoint, the cardboard is incidental. It's not a huge part of the value proposition of a sports card.
I guess scarcity is a key point, though, there. And what's preventing there being a huge flood of supply, specifically in terms of comparable NBA products, but more broadly across the NFT space?
So it's a great question. And I think fortunately for us in the NBA Top Shot world, we have a case study and a precedent world that exists today, which is the physical sports card market itself. There are NFL cards, NBA cards, NHL cards, MLB cards, all coexisting today with Topps, Upper Deck, Panini, and tons of other companies all producing. And at the end of the day, we are putting a level of trust in Dapper Labs, the company that runs NBA Top Shot and the company that makes the decisions on supply. And that's a decision we all have to be comfortable with, the same way that when you buy a piece of art or when you buy a sports card, you're relying on the creator, not just oversupplying the market. And Dapper has always represented themselves as a company with a long-term view, 100+ year projects, the CEO always says. And so, their incentive from a financial standpoint, from a collector standpoint, is to build a product that's attractive for users. And one way to not do that is to oversupply the market. So it's a risk, of course, but one that I'm not overly worried about.
Do you own these assets, Michael, because you enjoy having them, or because they're an investment that you obviously called correctly and they've risen sharply in value? And I believe your day job was, or maybe still is, being a financial analyst. So how do you try and value whether now's a good time to take profit or not?
Yeah.
In answer to your question, I think it's both. I really do enjoy the Top Shot moments as a collectible. For the first probably 2 or 3 months that I was collecting, it wasn't really a financial game. It was 500 to 1,000 of us in a Discord chat talking about our Top Shot moments and talking about some of the the beautiful plays themselves. There are two plays in particular from last season that stand out as to me as an NBA fan, which are Vince Carter's last shot of his career, which was a year ago yesterday, and it was a career cut short by the coronavirus pandemic, and LeBron James doing a dunk that was an exact replica, effectively, of a Kobe Bryant dunk just 11 days after Kobe Bryant passed away. And both of those are moments that are captured in Top Shot. And so as a collector, as an NBA fan, I love those moments. And I did view it as a financial opportunity. So I do want to acknowledge that I'm in a
He's speculating. Answer the question as to how you value it.
New platform, a highly risky platform. But I viewed it as a great, great opportunity. So I made a very large bet that seems to be working out so far.
We're talking about Top Shots, but you do also own a Beeple. It looks like you bought it for what, $1 in December. you own a couple other types of NFTs as well that speak to the skyrocketing value of some of these different products in this new marketplace. How do you decide what to invest in and which one to buy, what to choose?
So it's a great question. I mean, in the case of the Beeple, he had a drop in December where he had a number of what are called open editions. He had a few one-of-one pieces, and he had 100 $1 pieces. And it was effectively just a chase to see who could click the fastest, who could get to those pieces first. Everyone knew they would be worth more than $1, of course. So in that case, it required very little analytics. It was more just who could be fastest. I happened to be lucky enough to be one of the ones to get the $1 piece. And today it's worth materially more than that. And I'm a huge fan of Beeple's. But in terms of going forward, it's a very, very challenging
situation. Like $100? A lot of
creators in the world, a lot of artists are seeing the dollars that are available in the NFT space. And we are going to be flooded with supply. So I try and look and say, 10 years from now, what's going to be relevant? And, you know, if it's just something that's beautiful to look at, if it's something that, you know, is from a relatively unknown artist, it may not survive the test of time. There's going to be a ton of supply coming on. And so I've focused my dollars on NBA Top Shot, which I think has a unique story, CryptoPunks, which are the first NFTs that ever existed on the Ethereum blockchain, and names like Ferocious, who I know was discussed earlier by the Niftygate founders, and Beeple himself, I know, who was on the show earlier today. So I've tried to stick to very, very high quality assets that I think will stand the test of time.
Michael, good luck with it, and congrats on some nice gains so far.
Thank you very much.
I don't know. I can't handle it. Let's listen to Larry. Oh, what's this? I definitely only pushed the button once, but okay.
Doesn't quite square with that. So it remains to be seen what a climate czar out of Treasury will be able to accomplish or do that will not detract from the overall Treasury Department's mission.
You know, that was a good sidestepping response, and I appreciate your diplomacy here. Actually, we'll come on another time. We're short of time tonight because of Biden's speech and so forth. But I want to tell you something. They're going to have environment and social goals. They're going to have green banking.
All right, let's see what else is going on, Mr. Kudlow. Oh, Kudlow, come on, man. Come on. We got to get some more content. Get Peter Schiff on there. All right. So what do we got over here? EXPI, all of a sudden. Wow. What's going on here? You got some green candle sticking up. Wait, but the volume's like nothing. Oh, the volume's nothing at EXPI. All right. Well, that makes sense. Okay. So Upwork's actually down 2% here in the after hours, which was only up about 0.25% today. Shift just went down 1%. Ebex is only down 0.5%. Yeah. What else in the aftermarket here? I don't know. GameStop, a lot of things flat. Yeah, EXP and Canoe going back to 15 after that sell-off there we saw. And Churchill up about 1/3%. Nice flour tortilla. Yeah, geez. I have seen Blau talk about NFTs, and I know people talk about these NFTs as like owning an experience. But come on, how do you transfer that value? You know, I can't give you my experience. That's bizarre. To tell you. Okay, became a member and paid $50 to tell you how wrong and boomer you are being after NFTs. You're being after NFTs. Okay. Well, thank you. Thank you for saying the rest of the content is incredible. Well, I want to understand. I want to understand. Yeah. Thank you for Jay here highlighting. Liquidity matters. And look, I sign up for assets like real estate, and I realize a house that's a fixer-upper is not going to be liquid until I fix it up. A house that I demolish and rebuild is not going to be liquid until I build it. A stock might lower in value, but it's probably going to be instantly liquid. My credit lines are usually liquid unless they get frozen by the suits. But I try to prevent the suits from freezing my credit lines by drawing on my credit lines before they get around to freezing my credit lines, because I can't take my money back once I draw it. An NFT does not give me that same confidence of liquidity. If I have $1 million in NBA Top Shot clips that I could say I own, and somebody could go on my website and watch those different clips, and then the market collapses, it's like, all right, time for me to sell. Crickets. Nobody buys. The value of my Top Shot collection just went to zero. Yeah, I'm sure somebody would buy it for like pennies on the dollar, right? But that's the concern. So anyway, thanks for the $50. Maybe I should just take that and buy an NFT. Yeah, and that's the other thing is like, what's to stop just many more of these from being created. And I know like each one is unique, but I mean, you know, every 151 Pokemon isn't unique. I don't know. I don't know. It seems like a digital collectibles is a great way to see it. Look, I collected bobbleheads. I collected bobbleheads, not because I thought I'd be able to sell them for more, but because I wanted them. That's what you want. It's fine. That's different. That's fair.
Latest COVID-19 relief package provides expanded subsidies for health plans under the Affordable Care Act, making it less costly to get health insurance, even for those out of work. Next, she says, get disability insurance. Employers may offer it, but aren't required to. Getting it on your own is more expensive, but could save you from financial ruin if you're unable to work due to your illness. Her final tip, build up savings.
We used to say 3 to 6 months of emergency savings, at least 6 months now.
Pasco and her fiance, John, a chef, drained their savings when he also was out of work for a few months. Now that they're both working, they're turning a corner.
Our savings is thankfully starting to increase again.
All right. I don't really want to listen to this pre-recorded thing here. Bobbleheads are worth thousands. Not my broken ones. All right. Well, yeah, that's the other thing. Like, I don't understand buying a clip of someone dunking for 150K and watching behind your computer screen. And like, I feel like I could do that on YouTube. Or I could go to an NFT website and just scroll through the options and watch them. I don't know. Yeah. All right. So, all right. What else is going on in the sticks here? Sticks, nothing. Express and Upwork leading declines. Clever leading gains at 2%. Let's look at the top news. We haven't done that in a little bit. Okay. Tech volatility roller coaster is back at pandemic crash level. Wow. Oh, nice. Somebody says their buy the dip mug arrived today. I'm waiting for my merch to come. Like my own versions of that, because I bought them too. But I'm still waiting for them. Maybe some more arrive today. That'll be fun. Thank you. Year after the crash, March is proving to be another brutal month for investors' nerves. NASDAQ 100 has moved at least 1% in either direction on 8 of March's 10 trading days, a string not seen since the depths of the pandemic-fueled bear market a year ago. After enjoying bulletproof status for most of 2020, uncertainty over tech stocks is building as 10-year Treasury yields push above 1.6% and the economy strengthens. Interesting. So this is just recently the swings up and down we've seen. Yeah, no calm days for stocks. Been something else. Woo. Okay, what else here? Okay, that's this is about paper. This is about Bitcoin. Housing industry calls for U.S. action on skyrocketing lumber. Okay, will stimulus work? Watch these 3 factors. What are the 3 factors? Inflation expectations, monthly payroll gains, and actually inflation. I might give that a read later. Okay, well, I think that about does it. Make sure to use that coupon code linked down below. It expires in 3 days. Gets you 38% off. The amazing courses linked down below. The stocks group comes with the buy-sell alerts. All of the courses come with access to the private live stream. And, of course, the chats that we do, which are fun. And, folks, I think that's all I got to say. Get your 2 free stocks with Webull. Go to metcalvin.com/Webull or go to metcalvin.com/BF to get $250, up to $250 for free with BlockFi, where they pay you interest on your cash and your crypto. Anyway, have a good one, folks, and have a nice weekend in case I don't see you till Monday. Bye.